Good morning and a happy new year to all. I hope everybody had a very happy and safe holiday season. No trading here overnight across the ag space as we celebrate the arrival of 2026. Trading does resume at 8:30 Central Standard Time this morning. I suspect holiday trade will continue through much of today's session. However, I do suspect we'll see a little bit of a bounce, at least try to see a bounce here in the soybean market, as we did see double-digit losses here on Wednesday. On Wednesday, the Trump administration, the USDA, finally revealed details of their Farmer Bridge Assistance Program. This $12 billion bridge payments are expected to be in farmers' hands here by the end of February. We do see export sales. We'll have export sales later this morning. This will get us through December 25th. A slightly higher U.S. dollar, slightly lower energy prices, and equity markets also looking to start off 2026 on a firm note, led by the NASDAQ. NASDAQ futures now up about 1%. The CFTC did come out with a commitment of traders update on Wednesday. This taking us up through positioning through December 23rd. Healthy selling across the soybean complex during this particular week, as money managers sold just over 37,000 contracts of beans, 26,000 contracts of soybean oil, and 13,000 contracts of soybean meal. Still leaves them long about 110,000 in the soybeans, short 67,000 contracts of oil, and flipping back around to about 7,000 contract short position in the meal. In corn funds that week were net buyers of 55,000 contracts, flipping their position back around to net long 3,000 contracts. March futures in corn look to hold support at the 100-day moving average at 438 3/4. Prices effectively held in the 20-cent trading range now for the last 2.5 months, 435 to 455 for that March contract. Export sales remain strong. Year to date, we are up 31% on the commitments versus USDA forecasts of up only 12%. In the soybeans, March futures there did fall to a 2.5-month low on Wednesday, with next support at the October low at 1028.5. We did see deliveries against the January soybeans slip to 913 contracts, while oil deliveries there rose to 48 contracts. Still no deliveries against the January soybean meal. Reported sales to China right now rest at just over 6 million metric tons. Actual sales probably in excess of 8 million metric tons. Look for sales to come to a screeching halt if and when they reach 12 million metric tons, as China will turn to cheaper South American supplies. We do get census crush after the close today, expected to come in at 225 million bushels in the month of November. That would be down from the all-time high of 237 in October. Bean oil usage for the production of biofuels in October did slip to 1.006 billion pounds. That's down 18% versus October of 2024, and the lowest for the month in 3 years. The USDA forecast for bean oil usage for the production of biofuels at 15.5 billion pounds, likely to be cut significantly here in the January 12th update. In wheat prices, look to hold above their contract lows here. March Chicago, that's at 504. Kansas City is held in a little bit better. Contract low there at 498 3/4. Dry across the southern plains here for the first full week of 2026. However, better prospects for rain in week 2 of the outlook. We did see U.S. wheat acres, winter wheat acres in drought rise 2% to 40%, getting closer to its 52-week high at 45%. Still no peace in Ukraine. Savicon did raise their Russian wheat export forecast 0.4 million metric tons to 44.6. U.S. export sales up 19% year to date, with the USDA forecast is up 9%. So thanks for listening, everyone. Hope we have a prosperous 2026.